Trading success is not about intelligence, it is about staying power. Why do so many new traders disappear before they ever find their footing? They arrive full of hope and intensity, post a few early wins, talk about freedom and possibility, and then vanish. It can feel like the market is built to grind people down. But it isn't the market that ends most trading journeys. It's what happens in the trader's head. Most people show up with daydreams instead of a roadmap. They don't treat trading like a craft. They treat it like a shortcut. They see a way out of bills, jobs they dislike, and responsibilities they'd rather escape. Slick marketing feeds the fantasy. Make money with a few taps. Turn a phone into a money printer. Impress everyone around you. On paper trading, it even looks easy. Buy, it rises. Sell, it falls. Confidence swells. Then reality arrives. Picture a young, driven beginner who jumps and after seeing someone flash a four-figure day, he funds a tiny account, gets lucky, doubles it, and starts imagining cars and vacations. One bad trade flips on him. He adds to the loser. He increases size to win it back. In hours, it's gone. He reloads, repeats the spiral, and burns through savings. Soon he's calling trading a scam and walking away. His story isn't rare, it's the default path. The difference between those who exit and those who eventually succeed isn't intelligence or a secret indicator, it's staying power. The winners endure the same drawdowns, the same temptations, and the same emotional storms. They last long enough to absorb the lessons most people don't stick around to learn. They recalibrate expectations. Trading isn't quick money, it's slow mastery. The market is a mirror. It reflects patience, discipline, fear, and greed. Recklessness gets punished. Consistency gets rewarded, but consistency takes time to build. Emotional weight is heavier than it looks. A green day can make you feel invincible. A red day can make you question everything. Without an anchor, clear rules, risk limits, journaling, and process, you get tossed around. Many people quit right before things start to click. It's like digging for gold and stopping a few feet short. What actually separates durable traders from the rest? They accept that losses are tuition, not verdicts. They set realistic timelines measured in years, not months. They focus on execution over outcome, risk over excitement, and routine over adrenaline. They study one approach long enough to let probability play out. Instead of hopping from system to system whenever a losing streak hits, they widen the lens from this trade to this quarter. There are predictable traps that push people out. Unrealistic expectations turn normal setbacks into reasons to quit. Ego can't handle being wrong and spirals into revenge trades. Fear whispers that stopping now is safer than learning to manage uncertainty. Comparison to curated social media wins makes steady progress feel like failure. Financial pressure magnifies every loss. Overtrading, overleveraging, and chasing make small problems catastrophic. The antidotes are just as predictable. Trade with capital you can afford to risk. Define risk per trade and daily loss limits. Journal every trade, including emotions and decision quality. Review weekly to spot patterns. Commit to one setup or system and give it a statistically meaningful sample size. Take breaks for clarity, not as an escape. Find mentorship or community for accountability and perspective. Separate your identity from your P&L. Each trade is data, not a judgment of your worth. Progress in trading compounds quietly. For a long time, it feels flat. Then habits harden, discipline sticks, and the edge shows up more often. Consistency emerges slowly, then accelerates. Most people never see that curve because they stop too early. The market doesn't reward the quickest learner or the flashiest thinker. It rewards the one who keeps showing up, refines process, and manages risk while everyone else burns out. If you're in the valley, questioning, frustrated, tired, that's not proof you're failing. It's proof you're in the work. The test isn't whether you can avoid discomfort, it's whether you can operate well despite it. Mastery in trading is less about predicting and more about executing a plan under uncertainty. The longer you sit in the chair with a sound process, the more you learn. The more you learn, the better your decisions. And the better your decisions, the closer you get to consistency. Most traders don't fail because they can't learn a strategy. They fail because they don't last long enough to let growth take root. Quitting brings immediate relief but guarantees permanent results. Endurance is uncomfortable, but it's the bridge to where you want to be. The market is indifferent but fair. It won't bend to impatience, and it will not withhold progress from those who persist, adapt, and respect risk. In the end, the divide is simple. Some people stop when it hurts. A few keep going with discipline. The latter group becomes the group everyone else thinks just got lucky.